Happy birthday to Rick. Happy birthday to Rick. Happy birthday, dear Rick. Happy birthday, dear Rick.
Happy birthday, Rick.
Thank you so much. It feels so nice to be 18 again.
You look 18. Rick, my college students still talking about Rick. They liked you.
Well, it was a blessing for me. I appreciate that.
That was a lot of fun. And I feel funny, y'all. I can hear y'all. I just don't have my headphones on because I left them in my car. So I feel real naked today. So I apologize. Hey, y'all. Thank goodness I'm not naked today. Look at this, y'all. We are at the 200 line. Look at there. And as expected, you would think that'd be a little bit of resistance. Looks like it kind of is, right? So we'll see what happens there because remember, Bobby Jean just called the bear market right here. And what does the market do since then? It just goes straight up. It's incredible. All right, you gotta laugh at it. So I told y'all in our chat, in our Discord, the Edelta Pro sent me an email and they're giving everybody that's had one before, and you can probably sign up for one as well, an account. You know, you can, it's a cool little back tester thing. And apparently they've got their own little brokerage that they're starting now. So, you know, something for you to play with. Now, if memory serves me correctly, it would not let me do futures before. Let's see if it'll let me do futures now. Doesn't look like it will, right? So we trade a lot of futures. Let me just see if I go ES. What does that say? It doesn't say that it would let us do anything. And look at there, there's my hedge research. I've even got my research in here. So let's see what happens. Start a new back test. It's been so long since I played with it, but what I like about this is it's kind of like Tastyworks. It's very visual, which is what I really like. So let's just make sure that it doesn't let me do the E-minis. ES. Okay, let me do /ES. Yes, it doesn't look like it's going to let me do it. So if we're going to do something, you'd have to do your back test on anything that we do, kind of like on SPY, right? So someone asked, hey, can you do something like on the 111 trade? Well, let's see what we could do. So 60, what is the, I don't know if we know the delta of our put that we normally sell. Do we? I don't know, maybe it's around 10. Now if I could go put spread. See, I'm not sure. Let's see if let me do custom. You need at least one leg in your strategy. Okay. Well, let's put something. Okay, so you could do a dollar. There we go. So on a SPY, we could do instead of a delta, we could sell a put, all right, for how much? We normally sell that put for $20, which would mean if we're doing it in SPY, now y'all help me because my mind is a little shaky. We sell one for $2, but that's not right because that would be too close to the money. Let's see, percentage minus 40%. Maybe it is easier to find one at the delta or something. All right, so we get that. And then if we did how would I do a put spread? No. Make it put. And then if we had put, there we go. And we're going to sell a put. And if we bought one, I said if we bought one, that's selling one. How can I make you into a buy put? Oh, here it is up here. Sorry, let's take that off. So then we buy put. There we go. Now you can make a put spread, right? So then you could make a put spread. Help if we build one. Let's go to our, we're just playing here. We're just playing. Let's go to I still like building them in the E-minis because the macros, because that's where I know how to build them. Well, let's see where we got macros. We're gonna do 111. So we're going out closest to 60 days without going over. That's just where I like to do them. We're gonna do a long put vertical. See if we can find the deltas on these. All right, so we're gonna go 50 points wide. No, Bob, what are you doing? Come on, man. Hit the right buttons. Unbelievable, Tubby. Come on, Tubbs. There we go. So what's the delta on it? And I imagine the program uses, we got the 28 delta and the 25 delta. All right, let's go put that in. 28 and 25. Where you at, Bob? 28 delta and 25. 28 delta and 25 delta, right? So there we go, our put spread. Make sure I'm doing it right. And then we got to sell our naked. So our naked would be down where we get around 20 bucks. So that currently would be a 8 delta. All right, 20, be around an 8 delta. This may actually work. Nothing I ever do works. This is going to work. All right, we'll move that up to 8 delta. All right, so that's a 111, right? We got a put debit spread, and we've got that. So then you go 60 days out, trade frequency. Okay, so we like doing them daily. Let's do our trade daily. Technical filters. Well, we don't need any technical filters, but it's cool, I guess, that they let us do something. Let's say use only monthly expiration. Shoot, we use anything we can get. We're not picky. All right, now if we want to go 10 years out, entry condition, 60 days, we're going to do one daily. Now, here's the cool thing too, right? You can do early exit triggers, re-entry conditions. You can say, I'm going to exit this at 21 days. You can do a stop loss. It's really, really cool. So let's run this back test and just see what it does normally, right? We'll do 10 years back. How would our 111 perform? All right, let's see. This is so exciting. Come on, show us that it's the best trade known to man other than the Rick trade, since it's Rick's birthday. Rick, I saw that picture of that little red Volkswagen. Is that yours? Are you getting it?
No, I wish it were mine. It was, my mother-in-law used to have one just like that.
I tell Beth, I said, we need a nice older car. I'd like a 1960 Chevrolet convertible, something like that. And then I think my kids would destroy it, right? Because the top of my car in my 2011 classic Nissan Rogue is dented in. And I started thinking, why is the top of my car dented in? It's because the little jokers get on top of my car and jump on it. Unbelievable. Wow, this thing is really thinking, y'all. We have given it I hope it can calculate what we're doing. And it's probably just because I went back 10 years, right? It's got to figure out what we're doing here. So let's see if this thing worked pretty good. In the meantime, while that's running, we could do other things. So let's go to our charts, see what the market's doing. All right, so we're still in the middle of the opening 15-minute range, which is kind of cool. We are going up and above the overnight high. We're above VWAP, we're above cash open, and we're above the hourly mid. So the AD is interesting in that it's negative today, even though the market is up slightly. Isn't that cool? So what's volume doing? Volume is pretty steady. We're breaking down a little bit for our lunchtime chop, but that's fine. So let's look at our big green monster. Oh, and I want to let y'all know I'm still running the hedge fundy excellent adventure thingy in my little Roth IRA. I still left that in there. So we still got that going. So we'll still work on that once every quarter and update it. So here's fair zone, here's overbought, here's oversold. So we are now fairly priced in the new fair zone above it. And that surprised me a little bit. I really thought we'd see a pullback back into this one, but apparently price still wants to go up. Why? Because Bobby calls a bear market right here. And we've been nothing but bullish since. So it's interesting to see. And I think a lot of it's going to play out with what happens in Russia, in the Ukraine. A lot of people believe, and they believed this before in different skirmishes across the world, but there are those that believe that this is the beginning of World War III. So what would make this World War III would be Putin, whatever you call him, escalating into a nuclear war or moving into areas that are NATO nations. And if he were to do that, we're most certainly on that path. So hopefully none of that comes on. Remember, volatility is normally overstated, right? Even in all aspects of your life. You get the bad news about something and the news is really, really bad. Then a lot of times we beat whatever it was that was so catastrophic. And that's generally what happens even in historic events. So historically, there are times when volatility, true volatility is worse than the perceived volatility. And that would be the case of like a World War II or World War I, where volatility truly is out of control. But for the most part, even on things that you and I perceive to be crisis, it's not as bad as we perceive it to be. Go back to high school, you've got a huge test and you think, man, if I fail this test, my life is over. Okay, so maybe you did fail the test. Is your life over? No. Maybe you had to study all night for an exam and you go, man, it just cannot get worse than this. Well, is that the worst thing that you've ever experienced in your life? No. So that's why we like to sell options, is because volatility is overstated, right? I mean, it's perceived to be worse than it actually is. So I'm going to hang my hat out there and say it's not World War III. I'm going to hang my hat and say that Putin's not going to escalate more than, the markets right now are telling us that he will. And it's still a good time to sell premium. So that makes sense. I mean, I kind of think of trading and what we do and apply it to all areas of our life. Volatility is overstated most of the time. Most of the time it's overstated. That's why we sell premium, because the volatility is not as bad as we would perceive it to be. And right now we're even perceiving that we're fairly priced in the market and that we're going up, up, up. Now, the only thing that causes me pause is, I always look here on volume profile. And when I see this point of control and I see this area where volume was really, really, really comfortable trading, and I look up here and say, okay, we're fairly priced, but price is real comfortable over here. Traders were real comfortable putting in some good time volume over here. And it never would surprise us if we saw a pullback into that area. But what do we know? We first and foremost go by our little chart here, right? So let's pull up our skew driver, see what our skew driver. Please tell me this thing has given us an answer yet. Oh, behave, it has. All right, so we'll go to that in a second. Let's look at the skew driver first. Skew driver. I don't think I want to. I think everything should be fine. All right, let's see what our skew driver looks like. Skew. Look at there, y'all. We are back to this. We're back to elevated, but not weirdly elevated, right? So we're 88 or so, 80. Make sure I'm on the right expiration. 28 or 32. Maybe 30. Well, I don't know which one. 28 is fine. 2 from it. So we're at 87. So let's see this. And you would expect it to start going down as looks like the same reading I had the other day. 87. Today is the year of our Lord 3/21/22. So We're still elevated significantly, but we're back to some sense of normalcy. And we still anticipate that over time, this will come back this way. What would cause that to do? Sideways to bullish markets would allow the skew to go back to normal. But remember, this elevated skew is elevated opportunity, right? Elevated skew is elevated opportunity. All right, now with that in mind, let's go back and see how our 111 did. All right, so here we go. We had a realized return in this little hypothetical portfolio. What did we start off with? I guess you start off with, maybe it'll show me here. Oh, wow. Something looks terrible there though, doesn't it? So we made 83,773. Our average profit and loss per trade was $34. I made 58 cents a day. Our average duration was 59 days. 27% return on capital. Required capital was 311. So what is that saying? We needed $311,000 to run this portfolio. Our maximum drawdown was 108.6%. Wow. Loss ratio is this. Some contracts had zero trade volume. Really? Hold on a minute. We're in SPY. We did our deltas right. We did our, all right, let's go back. So here's our little profit and loss thingamajiggy. Looks like we got killed in 2020, right? But then we recovered quite nicely. And let's see if we can go in and make a, let's see, daily summary. And y'all, it's been so long since I played with this. So here we go. So we started our trade in March 2012. Margin, underlying, portfolio balance. Okay, so we started off with $100,000. We start off with $100,000 and we end up with $83,000 profit. Okay, so let's take a snapshot of this. Here's what I like about Edelta Pro. It's kind of cool that we're playing this out in real time and me just trying to figure it out. So let's, what, did you say something, Matt? Did someone say something? Let me mute everybody. There we go. All right. Hot shot. And let's change some of our assumptions. Okay. So what if we were to exit this at 7 days to expiration? Okay. Do not reestablish. Wait until expiration. Now we don't want to do that. We want to reestablish on the next trading day. All right. We're daily traders. Hey, wait a minute. Can I do that? Roll out next traded day or immediately. There. Okay. The next trading day, we'll close it. We got one going every day. So now let's see how this works, right? If we were to get out at 7 days to expiration, and we'll let that run. All right, Matt, I'm going to need you here. Okay, Ken's in the house too, so I'm going to need y'all here. So look what Big Daddy put on, and y'all see if I did it right. So I put on a trade in the E-minis, and I did a 1-1-1 in a calendarized fashion that we were talking about, and we'll give credit to Don Kaufman and his group for this. So we'll kind of see if I did it right. Now, the great thing is it worked great so far, right? I'm up 112.50 on that trade. Now, why did I do it? Why did I do it later after we got out of the thing? Because I wanted to increase my theta on my existing micro trade. So I wanted to give it a good, whirly bird and see how it went. So let's see what Big Daddy did in the E-minis. So it looks like I went out closest to about 30 days. I think it was 27 at the time. And I did a put debit spread. See if we can find it. Come on, baby. We did a put debit spread. So here it is. We did a put debit spread, and I did it 100 wide, right? I did the 43.05 42.05. Now, here's the thing. If you want to do this, you could continue doing them 50 wide, right? But I did it 100 wide. Right, did 100 wide. And then I financed that by going out another 30 days or so. And I sold a naked put component of our little trade. So we would expect this trade to be up today, especially on the naked put component, right? So here was the naked component that we sold, and I sold that for 36.50. Why 36.50? I don't know. Just the one I chose. All right. It may be easier to look at it. I think I did it over here too in this account. Let's see if we did it in this. Did I not do it? Yeah. Here I did it in this. So let's look at it on the curve. Let's see what it looks like. On the curve, here's what that trade looked like. And what do they call it, Matt? The inflection trade or something? What does he call it?
Inflection point spread.
Yeah. Inflection point spread. So when you look at it, it looks a lot like the space trip trade kind of, and that's kind of what our little micro trades look like, right? They kind of look like what we look like with the space trip trade. So this trade has no downside as long as the market goes up, market goes down. We got this nice little profit hump that happens here, and you got a really, really low break-even point all the way down here. So we put one of those on. And the reason I did it is kind of old school, Bobby. I was like, my theta is not where it needs to be. I want my theta higher. I want to put more capital to work. And so I've got one of these on. Now, will I do one once a week or so on this? I don't know. I think it'll depend if we go old school, Bobby, on, hey, what's my theta requirements, blah, blah, blah. But right now, I'm really digging it that we got this on. Okay, really, really digging it. So let's go back. Let's see if we've run our back test now. Okay, now look at this. By exiting at 7 days, we were thinking that it was going to help us, right? Did it help us on our realized return? And the answer is no. And it decreased our return on capital. Remember, if we just let these things go to expiration, we made 83,000. Now we made 86. Our profit went down, blah, blah, blah. So that didn't work. All right, so let's try something else. So what about if and we could do all kinds of different things here, right? But we're just playing while we got this on. So let's do a 14-day expiration. Where'd it go? Yeah. We got out 14 days. Okay, go back to our thing. So what we want to do today is, now that I got my theta nice and big and chunky, I got my Vega not where I like it, and I got my deltas are slightly neutral since I'm in bear mode. That's fine. Let's put on another micro trade today, our 111, or we could do the 112. We'll see what it looks like. Okay, so where do we go? I go out closest to 60. I already built this one. Go down. And we do a long put vertical. And we'll take that baby down to where I can pay for it for $10. Normally we go $9.75. Experience has taught us, and we have to bump it up a quarter to get filled. 4250, 4200. So that's at the 32 delta or 29 delta, 26 delta, 29, 26. So let's go here and fill that puppy. Come on. Come on, Leroy. Filled. We'll go 10 1/4 just to get it filled. Okay, so we're filled. All right, so we spent 10 1/4 on that. So now we got to finance it. So we're going to go way down here to the, we could go to the 3740, 10 delta, 10% probability of being in the money. All right, so let's just look at these areas down here. If we want to do a 111, let's look at the 3750. One thing you can do is go, well, where is that? Where is the 3750? How safe am I if we do this? And get my hand. Come here, hand. 37.50. How, what level is that? You start looking at it on this little deal and you go, man, how, let's see, drawing. Where's my line? Draw a line, Bob. Here we go, price level. You could draw a price level here. Oh, there. So we're looking at the 37.50. So look how safe that is. And that's why we like this trade. I mean, you would have to go through tons and tons of different zones before we ever got down to your 37.50. Way down. And sometimes it helps to look at something like that. How safe is my short put? So the probability of us getting there is 10% over the next 60 days. We've got a 20% chance that that will touch that. Why? Because the probability of touch is twice the probability of expiring in the money. So good. I like that. So let's put that in. Now, here's what you could do though. You could say, well, what if you want to go further down? Instead of selling, something with a 10% probability, we could sell something. We spent 10 and a quarter on it, so we could go down farther, right? And go beyond 2 standard deviations. Get way safe. That's the appeal of the 112. Is now I could go down to the 35.30, collect a little more premium by doing 2 contracts. All right, we do 2 contracts. And now we're down at the 35.30. What does it look like on the screen? 35.30. 35.30. 35.30. About right here. So let's do a line there. 35.30. Oh, baby, where's my line? There we go. So we're at 35.30 right there. Oh, come on, Bob. Come on, Bob, oh Bob. Let's put it there. There you go. Now you look at that, you go, geez Louise. Wow. We can go way down there now. So we're really happy. And that's why, maybe in a higher volatility environment, it's not bad to put that down way down there. So let's do that. And it just moves our break even down farther, right? So let's put that on. I like that. We're collecting a little more premium than selling 20, right? We're going to collect 27 bucks by doing 2 of those. And the buying power is not much different than doing the 1. Well, there we go. So we got our 112 in for the day. Everybody understand the 112? Got our curve in, our analysis. See how our little beautiful little thing is looking. And there we are. There we are. And what's the 111 doing today? Making money, just like it does pretty much every day. It's a little money cow in it. With a nice little hump to the downside. All right. So let's go back to our back test and see what we've done now. Aha. Leaving out at 14 days doesn't help anything, does it? So we were at 83,000, now we're at 65,000. All right. Let's do the 21 day. Let's do the tasty trade, get down to 21 days. And then we're going to add some things to it. So let's do this, run back test. Hopefully it doesn't take too long. Have any of y'all ever played with the Edelta Pro? It's just really visual. It's not as complicated as a lot of them. It's just kind of a cool little back testing thing. So if you've never signed up, You could do the beta. They may let you get in on the beta of their new platform for 30 days. But, you know, the thing with their business model is I used it for 30 days and then I was like, I've done every back test that I needed. I really didn't need to. So I like what they're doing as a business model. Now they're saying, hey, I want to create our little brokerage. We could use this thing for brokerage. Yeah, and that's kind of cool. So not that we're going to all switch over, but it'll be neat to see what they've done here. All right, come on, baby. Come on. Give me an answer. Give me an answer. Darn you. And then why don't we do this? Let's go max profit and let's do a stop loss and we'll do all of that, right? So we could trigger this thing to get out at say a 50% profit, right? If you get to the whole trade at 50% profit. Somebody's calling me from Nebraska. I know they're wanting to know, hey, Bob, why did you drop out of our program? So look at this, 21 days doesn't help it at all either, does it? 21 days, now we're up 58,000 compared with just letting it go to expiration and being up 83,000. Return on capital is what, roughly the same, is that right? Yeah, 27%. Worst drawdown, 108%. The little drawdown is not as much, but it's 73% down. But so now let's go in and let's say, okay, let's try to close this at 50% profit and then reestablish the next trading day. And then do y'all want a stop loss or no stop loss? So a stop loss of, let's say, if you lost 200%, let's get out of it. The trade goes down 200% and we'll set up our trade the next trading day. Exit when tested, exit at a percent, whatever. Let's run this little thing. While that's working, we'll see if there's anything else we need to do over here. All right, so now we've got the E-minis, we've got that, having a nice day, beta waiting, negative delta, positive theta, negative vega. Looks like what we're doing is selling premium. Come on, baby. Can you imagine though? I mean, the fact that we're having to wait on the calculation. I mean, think about all the calculations this thing's having to do. So we can't complain at all. But it'll be interesting to see what the results are here. See if we can make this thing work a little bit better by putting in a stop loss or a 50% profit. And you could play with, I wish they had an optimizer, right? So kind of like portfolio visualizer would be really, really cool to see if it had an optimizer to say, okay, over the last 10 years, you could have optimized this trade by closing at X profit or an X stop loss or exiting so many days prior to expiration. That would have been really, really cool. But what we're going to do is just play with it a little bit so that you can kind of optimize it for, you know, just look at how different portfolios would have performed. So what I'll probably do is after this, I'll do one more thing. I'll probably maybe do an exit at 21 days. So look at this. This did nothing for us. Look at that. Everything went down except for the return on capital did go down. You made $40,000 instead of 86,000. Each of these things were still profitable. 44% return on capital, which is interesting. But look at this. You only had a drawdown of 8.74%. That's kind of cool. Interesting. So let's try to do this. Let's take off, let's do our 50% profit. Let's take off our stop loss. Get rid of that. Yeah, get rid of that. And run the back test. We'll see what that does. So do any of you guys have Edelta Pro? It'd be interesting if you guys could kind of run this too. MRP wants to know, how does the Rick trade back test with this new software for the last 10 years? Let's see. And I think we could do the Rick trade on this. Let me think. We'll just do it weekly, or do it. I'm not sure what our. I think you can do every other day on this or something. So I'll try to run those as well to see, or we may do some of it tomorrow. I don't keep y'all too long today. Maybe we'll run some Rick trade things back. Rick says he doesn't care what it's done last 10 years. That Rick trade has been strong for Rick, so he knows how to do it too. And the cool thing is he's got like a sixth sense for like when to put it on. You know, he's cautious. He's like that. He's like a cheetah on the African plains, just kind of sitting around looking for the easy prey. That's what Rick's doing. So he's got that little sixth sense. Whereas I go in, I just, bulling, trying to shop, put them on all the time. Rick's he's really good. He knows when to cautiously put those on. Come on, little thing. Give us an answer. And then I'll let y'all head on for the day. All right. So what is this? Oh, interesting. So if we put on this thing and just do 50% profit, how does it work? Okay. So $80,000. Look at that, 79% return on capital. And I have to study these too, right? Let's look at them side by side. You made almost as much money, almost as much profit and loss per trade. 79% return on capital, 27% return on capital. Your max drawdown in your portfolio was 67.39% compared to 108%. So, definitely taking them off at 50% seemed to be the nice little part. Now, what you could do now from that point is go, well, what if we took them off at, different profit percentages? Now, one of the interesting things that you'll notice on our 111 trades, and let's see if let me run it before I do this without knowing, Bobby, shoot first, then aim. I'm gonna move that to 100%. Yes. All right. Because we know on this trade that sometimes these things get over 100%, don't they? Let's see our groups. 111 call is down. 1124 to 67%. Here's one at 92%. Here's one at 94%. I was hoping to show y'all one that was over 100%. All right. We've got 70, 80, 36, 24, 9%. Nothing to show you. Sometimes they get over 100%. And remember, when the market was going down, we saw some of those over 100% because those put debit spreads were, you could lose 50 on them, but maybe you could make 200 on them. So that's why that sometimes is over 50% or over 100%. And we've seen that in the past. Let's hopefully this thing will spit out one last time and give us a little number at 100%. Okay. So it says, hey, Tubbs, it's not worth going to 100% on the trade because your return goes down, your return on capital goes down, and your max drawdown, it's just terrible. So, you can play with this. And again, you just kind of have to go in and say, what overall is going to be my strategy on managing these trades? And I mean, you could go and, what about 99%? I'd say test it maybe at 80, 70, 50, 40, 30, a couple of those. And then if you wanted to put your exit criteria in there and come up with something. Now, keep in mind what backtesting does. Backtesting has all kind of biases in it. And we have no promise that what happened over the last 10 years will happen for the next 10 years. But at the same time, it's kind of cool, right? Because we've seen a lot of different things over the last 10 years going back to 2012. So we've had a lot of different things happened in the market. We've had the Corona crash, which you can easily see on a graph here of how that would have worked. And then, you know, is it possible to test the black swan hedge on this and different kind, or the sweet Bobby hedge? Yeah, I mean, go in and try to do some of these things and see how it worked out. But again, if you've not been here, go to edeltapro.com. I think even if you can't get in on the beta, you know, I think it's 99 bucks for a month or so. So, you know, it's fun to keep for 30 days and just play with it. Play with all different kind of things that you can back test. All right. And they're not paying me anything to tell you that. I just thought it was kind of cool. All right, guys. Good session. Hope you have a wonderful day. I'll see y'all tomorrow.